We go into our discussion. We're going to first start with the stock market review, and of course, we'll also look at issues around the business confidence in Nigerian economy, which the CBN has said has fallen to 14.5 index points from 17.7 index points there. That's coming from the Central Bank of Nigeria. But first off, we'll look at the stock market review before we go into that discussion. I have joining me virtually from Abuja here, Mr. Steve Nwachukwu is an economist and is also a stockbroker. Good morning, Mr. Steve.
Good morning and thanks for having me.
Glad to, good to see you. Let's begin with the stock market review. The market has been, where is the character of the market to either, close in green or in sometimes close in red as well. Tell us your assessment of the performance of the market in the last 1 week.
Well, like you established, yes, it's in the character of the market, it's in the dynamics of the market that you see an up and down, bearish and bullish trades during the course of the week, the course of the trading. So far, we have seen greener days in the week. We expect that if the market edges up again today and edges up again tomorrow, definitely will close in the positive. Just like the market lost about 0.2%, which is about 20 basis points in the last week. So we expect a positive week today, at least to compensate for the loss for the last week. Like you read out in your market analysis, the data are there to show there is a growing activities. There is also a growing interest in some of the financial sector, and driven also by some activities we witness in oil and gas sector, and that has given the market a very good performance year to date, above 30%. So we have seen in the oil and gas sector, we have also seen an increase in the insurance sector, also in the consumer sector. In fact, the oil and gas have gained more than 133% year-to-date performance, while the insurance sector is seconded by about more than 39%, with the consumer sector with about 28% increase. And the banking sector is also there, though lagging up, but definitely we'll see a closure of the market before the year ends in a positive, maybe above 32 to 33%. When we expect the Santa, we also expect some optimism in the market so that we can have the market, like I said, close above 30 to 35% for the year. Thank you.
Indeed, you made mention about the banking sector, and of course, many of the banks have indeed raised one right issue or the other during the course of the year. Many of them, a lot of people are saying they are in a race to meet up with the CBN recapitalization exercise as well. The UBA is knocking on the door as well as we speak. They have written to the NJS for approval for them to issue that right issue to their shareholders. Now, what do you make of all these right issues coming from the bank? Most of them are indeed limited, not to the general public, but just to their shareholders alone.
Yes, of course. Let's give a background of this very quest for right issues, raising of capital through private placement, public offer, or what you currently witness in the most of the banking stocks opting for right issues. You have in mind that earlier this year, CBN gave a directive for the recapitalization of most of the financial institutions, and that gave rise to the owners of these companies coming to their shareholders or coming to the public to request for additional funds to be able to meet this very recapitalization threshold of 500 billion, 200 billion, and thereabout. So we've witnessed a couple of such offers in the market as we speak. First Bank is still ongoing, and they are looking for about 150 billion naira. And like you also alluded to, UBA is also knocking. They are in days to come. Maybe in 1 week time, they will definitely float their right issue in the market, selling above 35 naira or 35 naira right issue. But the option of right issue, like you asked, is a question of choice and dynamics in the sector. You find out that most of the owners of these companies or majority shareholders wants actually to consolidate in their shareholding structures in this very financial institution, and that gives rise to why they opted for right issue. You know, when they go public, you have new different investors that will come in, and they don't want anybody to share that board position or the board tables with them. So definitely that's why they opted for right issue, so that they can consolidate with the existing shares they have. Like I said, they are majority shareholders. They are the owners of the company. They know what is best for their company, and the option of right issues, they have weighed their capacity also and their performance, which perhaps shows that, yes, we have done well. And if we ask existing shareholders to give us more money, they will give us more money because we have done well. So it's a question of confidence, or it points to the fact that these banks or the owners or the management staffs have understood the body language of the shareholders, why they opted for right issue, and they are not looking at public. So a good number of them have actually gone for right issue or a joint of them, like Fidelity did the right issue and public offer, and some other ones also did, like Sterling did outrightly a right issue, like you are seeing the Fourth Bank also doing an outright right issue. Zenith Bank also did a joint, yes, a joint of public and right issues, and a good number of them actually do it also a joint, where they give some percentage to the public and a good percentage to the shareholder as a 16 shareholder. So, like I said earlier, it's a question of choice, and the dynamics are available within this very institution. But the undermining factor is that they really want to consolidate their power, consolidate their structure, consolidate their interest in the bank. So I'm sure they don't want where they will start seeing other interests that may want to see what is going on in the board, or want to sit in the board. I think that perhaps these are the underlying factors. Yes is a good one, that you have confidence within you, that you can raise this money within you. You are not looking at the public. Thank you.
All right, indeed, very good clarification. Of course, it's good to deal with those you know than indeed bringing in some investors that you may not indeed know their interests and of course their intentions there. You made mention about Fidelity Bank. They indeed were in the market as well for their own right issue a couple of months ago. But there's been a debate about whether Fidelity Bank is a tier 1 bank or a tier 2 bank given their performance in recent times.
Let me make it simple. I think you can put them in between. Whatever qualities or criteria that qualifies a bank to be a first-tier bank, I think Fidelity has it. If it's in capital base, is in the spread, is in technology, investment in technologies of apps and ease, and whatever. They have it, but the classifications always, think towards some of these very bigger structured bank, bigger capital-based bank, and perhaps they don't want to include every other person. So, but there is no threshold, perhaps, to say yes, if you are in above $50 billion or you are within, let's assume 500 billion naira threshold capital base, or perhaps you are within the performance in your top lines, you are doing a turnover above $1 trillion or a turnover above 500 million, 500 billion. So basically, there is no established threshold to classify banks, but we conventionally use those in the first 5, those in the first 7, or those in the first 8. So it's a conventional or a rating, no criterions well established to say you need to have a national spread, a number of branches, a number of this, and a number of that. Like I said, whatever is the criteria to qualify any first-tier bank, Fidelity Bank, I'm sure, meets all those qualifications. But like I keep using, the conventional way we have used to classify most of these very banks is their national spread, and perhaps the first line of 5 of the first line of 7 banking stocks or 7 banking institutions. So if you are number 1, number 2, number 3, number 4, and number 5, so definitely you are now classified as first tier. Notwithstanding that, we should also look at other criteria like return on investment, your ability to pay dividends, and which this Fidelity Bank have geared up. In fact, they paid about 85 kobo or thereabout in their half year. A bank selling less than 14 naira is paying 85 kobo as an interim dividend payment. So, like I said, whatever the classification or whatever be the criterions, they actually met most of those criteria.
Indeed. Let's also talk about another company that is doing so well. It's barely 6 months on the NGS, talking about Aradel Holdings, and it has taken everybody by surprise. Though with the share price at the listing point was about 600 and something, it has fallen down to 533. It went to 400 and something, 441 or thereabout before it moved back to 553. A lot of people are actually expecting Aradel to be one of the big players in the capital markets.
So, of course, yes. When you said, most of these criterions to judge performance or the KPIs, the key performance indicators, could vary from one sector to another. If you are going by their quotation price, if as a broker, as a trader, I would tell you they've actually underperformed based on their recent performance. Like you said, they quoted around 600 and now they are trading around 490, 520 or 533. They closed yesterday, and perhaps are still looking bearish, and that very optimism and momentums have not gathered like it gathered the first week of their listing. So if you're going by that, I would tell you, yes, they have actually fallen below the expectation of major brokers or major traders. But if you're going by their financial statement, the outlook of the company, the sector they belong in, their expansionary drives, I would tell you is a future, if it's a medium and long stock that investors should look at for, based on their capitalization too, or quoted at the floor of Nigerian Stock Exchange. You find out that they belong to the trillion naira quoted stock. Over 3 trillion thereabout they were quoted during their listing. I'm sure by now it should be around 2 point something or thereabout. So the point is, yes, if you are considering their financial statement or their outlook or focus in their financial performance, yes, it's a good stock to look at for. But basically, if you're looking at their stock performance in the last 2-3 weeks, they found themselves in the main board of the Nigerian Stock Exchange. You will find out that they have really, investors have lost a couple of money.
Absolutely, that's correct. Mr. Nwachukwu, let's look at the stock generally now. The year is drawing to a close, and of course, investors are, engaged in rebalancing their portfolios now. Tell us the stocks to watch out for in the closing year, and of course, the outlook for 2025.
Well, the expectation in the market is that the momentum will keep rising. If you witness in this year, the markets have gained more than 30% year-to-date increase. And we expected such momentum to remain in the markets towards the end of November. We expect Santa to have an early visit in the market. You know that Santa comes with this very bullish trend, and we expected stocks to also drive, like I predicted or I forecast, that the market is expected to close above 32 to 34% year-to-date performance. So, and like I said earlier, if you asked areas of concerns or areas of stocks that probably investors should be looking at for, I think it shouldn't be a sectorial thing. It should be individual stocks, the history of the performance of these stocks, the dividends, their posture in dividend payout, their consistency, and even the performance in their financial statements over the 2, 3, 4, 5 years should be what should drive stocks individually individually, not collectively. Yes, there may also be a sort of rub up of when there is a bullish run. Stocks that ought not to have gone up will start following others because of their performance. And one should be careful about such stocks and look at stocks that are selling above their intrinsic values. A good number of stocks are actually selling above their intrinsic values, but some other stocks are also being priced underpriced. So, like I said, the expectation in the market is let's say the momentum to be up and more cash flows into the market. And once there's more cash flow into the market, it improves the liquidity level in the market. And like I said earlier, early visit of Santa will see the market closing above 32 to 35% for the year. So like I said, I can't pick and choose stocks for you that you will look at for, but you have to do your research, you have to do your study and look at stocks. Basically, like I said, the underlying factors to look at is stocks that have had good dividend payouts, because we are heading towards the year end where we expected declaration of dividend by early January and that. So this is the right time to take position in such stocks that you know for sure they have a good history of dividend payment, not just having a good history of dividend payment, they pay out good. The ratio of their payout, those who have a ratio above 5, 10 to 12%, you will see the momentum, or investors will be looking after that stock more than those who are paying around 2%, 3%.
Indeed. Mr. Nwachukwu, before we switch topic, let me ask you how you want the market to close today. Do you expect the bullish run to be sustained?
Expectedly, we expect, if all things being equal, there is a momentum gathering in most of the stocks, like we witnessed yesterday. The Zenith Bank, Access Bank, and a couple of other ones drive the banking sector to what you reported, above 1.33%. We also expected such momentum to be within the market, in the consumer goods, in the industrial goods, in the insurance sector. We also expected, because one of the most performing sector, like I said earlier, is the oil and gas, and we are seeing some kind of retracting in some of these prices. Like we see the all-time high of Orlando was around 90 something naira, or 94 naira, or 95 naira, and presently is selling around 60 naira. As I'm talking now, is selling around 61 naira, and this very drive for uncertainties are within these very stocks. So we've also seen the coming of the Aradel, and we've seen Connoy driving the market, selling above 260 or 240. So like I said, perhaps we should focus more on stocks that has fundamentals, the stocks that are well structured, stocks that has that potential for better growth in time to come. So that's what investors should be looking at, and the market is expected also to close positive, because we have seen that trend, building up yesterday, and we expect such will continue in the market. So it's either neither here nor there. We can end up having a closure or in negative territory or in a positive trade. But the expectation is that the market will inch up, even if it's a 10 basis points increase.
All right. Well, we look forward to see how the market closes in less than 3 hours from now. We're going to get all those data as well. Now, let's switch topic now and look at the issue of business confidence in the Nigerian economy. According to the data from the CBN, the confidence in the economy has dropped to 14.5% index point from 17.7 index point from the CBN there. What does this entail? Quite a whole lot of issues were indeed listed that has been responsible for all of that. What does it entail? In simple terms, can you explain to us, Mr. Steve?
Okay, let me, if I may explain, I think let's give a background of what it means to have a business confidence index. It's a survey conducted by the Central Bank of Nigeria. You remember a couple of weeks or months ago, Central Bank came up with this very indices to perhaps weigh the confidence, weigh the performance, weigh the reactions in form of survey of these very individuals, of these very key sectors, permit me, that determine the macroeconomic indicators of the nation. So CBN actually came up with this very beyond the MBS, giving us the statistical numbers from the inflation rate to other macroeconomic indices. CBN actually came up with this very idea of showing us how the key macroeconomic indicators, like they formulated the business expectation survey, and this has resulted to these numbers. As we stand or as we speak, it's a question of reflection. It's just a reflection of what has been happening in the market or what has been happening in the economy, that the expectation or confidence survey shows that there is about 3.2% drop from 17.7% index point to about 14.5%. There's about 3.2% drop.
Absolutely.
Shows that it's becoming much hostile. It's becoming much lower optimism, much hostile, much tougher to do business in Nigeria. That's simply what that survey or that result or the drop actually signifies. Is a reflection that businesses and firms are finding it difficult to strive. They have issues like you talked about, the issues around cost of electricity, or cost of energy, inflation numbers. It also has issues around the interest rate.
High interest rates.
A couple of them, even insecurity is one of those very
financial problem
that made the business environment so tough for businesses and firms in Nigeria to strive. So it's a reflection of the living realities that Nigerians and firms are passing through in Nigeria.
Like you rightly mentioned, some of the top 6 challenges, they're talking about the high interest rates, insecurity, high or multiple taxation, inadequate power supply, unfavorable economic climate, financial problems. If you're having all these challenges in your economy and you're seeking for foreign investment, what message are you sending to those intending investors?
The truth is that I think it's even better we keep dishing out these kind of numbers or this kind of software so that we can see the level of headiness and what the government need to be doing. As it stands now, it should those in the fiscal policy maker should be up and doing. I think this data or this information or statistics available should be in their doorstep, should be in their desk, and they should be studying it and know what to do to improve the business environment, the ease of doing business that is being touted that we are actually improving. But this survey actually suggests otherwise. The truth also remains that the investors, both foreign and local investors, needs to know all this. Just like the survey, those individuals randomly interviewed said, yes, issues of insecurity, issues of energy costs, issues of high interest rate. I'm very sure that the high interest rate issue actually rests on the CBN. They know now that yes, the high interest rate regime, which your posture, the Cardoza-led CBN has been carrying out, is actually affecting businesses, is affecting the confidence of investors, is also affecting the growth that is expected. So these are, like I said, every one of them, both the fiscal and monetary policy makers, should be digesting these numbers. It's, like I said, is a reflection of living realities that businesses and Nigerians are passing through. Having insecurity as one of the top of them, having inflation rate, having the interest rate, having cost of finance, and the rest of them being major drivers of these very uncertainties and low optimism doing business in Nigeria. I think the government should be digesting this and be putting their acts together to make sure that they put things in order. The question rather should be, what are the government and fiscal policy makers and even the monetary policy makers doing to make sure that they reduce this very hardship or this tough environment and difficulties that businesses find doing business through most of their macroeconomic policy decisions? Thank you.
Indeed, the part of that survey also is the fact that households expect further increase in prices of rent, medical services, food, and even others as well. But overall, the CBN did say the consumer outlook reflects optimism in the month of October. Do you believe in all of that, or the forecast from the Nigerians?
Of course I do. Like I said, it's a true reflection. It's a true reflection of living realities. In fact, the numbers are even economical in the sense that the percentage of 3.2 index point reduction is not that much, because you have seen a very quantum, a leap in the numbers. In fact, there is no item, there is no business. In fact, okay, let me take, for instance, the Manufacturers Association of Nigeria recently, I think around March, April, made a disclosure that more than 350 billion worth of goods is unsold. They have unsold goods worth over 3.2, but the last numbers as I speak is about 1.2 trillion. Can you see the difference? It means that they are producing the little they are producing, the purchasing power of Nigerians to buy these items are not there because of the high prices of these goods.
Absolutely.
High cost of energy, high cost of interest rate. All the input costs are driving these very commodities and items higher than what they ought to be. So that's why you are seeing that the unsold goods have climbed from 350 billion naira to about 1.2 trillion. So it's a reflective the living realities of Nigerians, and we expect that government should chew these numbers and react positively to it by making sure that the macroeconomic policy decisions, think towards alleviating the sufferings of Nigerians.
Thank you so much, Steve Nwachukwu, Economist, Stockbroker, for your contribution on Business Daily today. Very incisive contribution there.
Always my pleasure.
All right, with that is a wrap on the show today. We'll be back again tomorrow. I am Yusuf Akogun.